Hey guys, welcome back to this recap for the Wednesday, and price action was crazy today. A lot of spikes up, spiked back down, kind of landed right back into the neutral zone, if you will, for the day. So let's go ahead and look at what happened and analyze the price action that we have, and then from there, let's go ahead and dig in and see kind of how the system is designed and structure and that back test that we always talk about, and a lot of stuff that we've been continuing to build, which is the Kabroda trading battle box. You hear us talk about it quite a bit. It's a GPT that we built through OpenAI. From there, we're actually building it into a membership site that's going to have it all incorporated in there and make it easy, because you don't have to do a whole lot. You know, if you watch our lives, you see us set up the charts. If you watch me, I'm going to show you how I set the charts up. Anybody can do it, but we're making it about as easy as you can get. There is some future stuff that we're actually going to be putting out, which would even make it easier. We just have a lot of things on the books that we're working on, and we really want to help people be able to learn how to trade, not show you what to do. We want to show you what to do in the idea of how to read the charts and develop yourself as a trader and learn. But it's just like when you're in school, right? The teacher doesn't just show you the stuff and then you graduate that class or whatever. They teach you it and you spend the time learning it. Now, if you learn it, you get to use it forever. If you get to kind of cheat off everybody else, yeah, you pass the class, but the sad thing is now you don't have the ability to go out and repeat it or be able to go out and utilize it in a daily basis. So that's really what we're going after here. And that's why we're building the AI component into it, because we're all our knowledge that we are showing you on daily videos is we're putting that into the AI or the training. We're not actually building a lot of people think right now they want to build this AI tool that's going to go out and teach you how to trade or show you how to find levels, and it's just like anything. Computers really can't put trades on for you. It works great for a little bit, and then always have to be recorrected based on the market. And really what we want to do is show you how to analyze the market, just like that poker player learns how to look at the cards, understand the game, understand the table, understand how things are being played, and they make themselves professional poker players. Not really saying that trading's that way, but that is the idea that we're going after here, is you learn how to become a professional in this space and take advantage of it and understand the levels and what's being played. Just like any other strategic, anything that you do in life, just like in business, is the same thing. You could look at every trade as buying something and then reselling it. It's the same thing in business, whether you're selling a service or an actual product. You treat it the same way. You analyze the business and then set that structure together. And not everything that you buy or your service is always going to work out. Sometimes you do the service and it doesn't work out, and you end up losing capital on that service you offered to that customer. But the next 5 customers you're profitable in, and then at the end of the month your company's making you money. So that's kind of the same idea here with trading. So let's dig into it, and won't spend too much more time on that, but let's take a look at the charts and take a look at what we are always up to. It's very consistent with us. You'll find that in all our videos. Hopefully I ever hear the comment like, man, you're boring, you say the same thing all the time. Well, that's good. That means we're consistent. And that's just like business and everything else. The guy that digs into consistency, he's the guy that does well in the business that he's trying to run. So you can see we built this last 24 hours. We have the fixed range volume profile tool on here. It sets these blue lines, this little yellow line you can barely see in there, and then this red line. That's actually called the volume area low. The yellow line's that point of control, and the volume area high. It's set there for that last 24 hours based on the price action. You can see it was very heavy up here. Our weekly is also heavily right in that area. And then we put the last 4 hours of the market for its shifts, which is right here on this vertical line for myself. And you can see down here was the lower liquidity, because mainly this was the last price action in the last 4 hours that was kind of looking at. So obviously, what we always say, we want to be above the 21 and 200. You can see as the market opened, we had our 30-minute candle that we marked, which was right through here. And you can see it starting to trade up through there. Now, our breakout trigger was way up here on that point of control area. which would make sense because it's like if you can't take out this area back here in the last 24 hours, then it probably is going to reject, which you kind of see here, and come down. Now, what I was doing was I basically, if you watch my recap, I had the trade already built yesterday right here, and I thought I was going to run up and we had this fall out. Then it kind of rebuilt, and I basically just took my line and extended it on through. You can see it in there, and then put this on here, and I'll show you kind of what I did. I must have took them off, but this is kind of like what I built in the morning, and I expected this to break out here just like I was watching yesterday over here. And then of course I just took the same levels that we had, which was this area up here. When I was looking at this was the area of what I'd expect to break out of, and this is that bottom area that it bottomed out in. So that's how I created a decent target here. You might think, hey, you just messed that up. Well, we could take a look and put it back. There is the bottom area, which is right there. There's the top, so it's really the same length. I've had people actually question that, saying, oh, you just messed it around with the top so it's not as long or short. It's not that. You don't have to get that worried about it. But anyways, this was my target. This is where I actually was looking at trading this up to. You can see that it definitely blew through that area. I wanted this to break out. Well, I got in when it was still in this flag based on this pattern. So I got in somewhere right before the breakout. So normally, yes, we break out, wait for 2 candles. That's why I have this line marked. That's what I was waiting for. So I was actually getting in because it already broke all these key levels, and it was getting ready to test this same area again. I was looking for the energy spike. In my case, I was using my 30-minute candle as my stop, and then of course I went to my target right up here. So that was basically the trade. You can see that it went in one candle, took me out very quickly. That's always fun to have happen. Nice little profit in that trade. Then it went on up and tested the point of control here, and then fell right back down. This is why you always want to just run the targets, set your stuff, and then just walk away. Sometimes it's a bummer when it just keeps going and going, and you're like, oh man. But more than likely, this is kind of typically what happens. Now, if we jump into our 5-minute during that time frame, this was also the exit that you would want to take right here. See how it broke through there? That would have been a great area to go ahead and take this trade off, just because how fast it was rolling back over. So worst case, if I didn't have that, if I had my target way up there and it ran up and rolled over, that would have been my out. No matter what, it was a profitable trade. Now you can see that I was also looking at what the classic system that we do trade off of, and this is what we always teach in and talk about, is you trade the 2 candles closes after the break. So here's your break, 1, 2. So I'm looking at this candle. So you can already see that I would already say no to this. And the reason why is because our stochastics are topped. They're topped out right up here. They're already burned out here. Your MACD is already burned out, so it's starting to roll over. So that's already the red flag right up there for you. So we could jump into that 5-minute. We were just looking at it though for that exit period, but you can see that it's topped out right here, and everything is already showing down behavior. This is showing rolling over. You already showed the exhaustion from the move. So more than likely, this is probably going to start to roll on out and fall down. And you can see, obviously it did, and then you would have been out, and then now you're back out to your 15-minute and see, hey, well, are we going to go ahead and start giving us the breakdown? So because you already ran all in one move, you basically ran to the breakout, your jump right when this broke, and then this candle, I'm starting to count it again. Well, it came back up. Now this candle to me doesn't matter till it closes. Like it could have came back down and closed down here. If it closed below this purple line, I would have counted that as 1. And then if this one closed below the second time, then that's my 2. Then I can start looking at a trade for here to go on down. You can see we didn't get that though. Obviously it came right back up and went into the back up and above the breakdown trigger here, and then started to trade back up. And we were back in price action again between the 2 triggers. So if you're in the 2 triggers, you're back in that neutral state and you're waiting for the breakdown. So we had the breakdown again of the breakdown trigger on this candle, and then you had the second, but then this first candle and the second candle actually went right back up into and got the close. So you're still waiting. Now you can see I did have this pattern on here, and I was watching this roll back over. I could see this was coming down, this was coming down, so that's why I drew this flag on here. Pretty much I was just mimicking my moving averages and said, okay, well, this was a solid line. We're already making a grind down. I'm going to go ahead and put my trade on. I'm just showing you how I take advantage of price action through here. So I went ahead and went into the 15 minute and said, hey, are you giving me a trade through this pattern that I can trade beforehand? And yes, I saw it getting pushed down on from the 21. This was rolling and pushing over. And I didn't really like the MACD or the RSI. They weren't the greatest, but I did like this. Figured we could go ahead and get this pushed down. I knew this was strong resistance here at the 85,500. We all know if it can crack this level, we are going to see some energy. I do see some, it's probably going to crack this with some energy, come down, find a nice solid area in this zone. Something I would say pay attention to and look for that to happen. I do kind of expect that run to come down, spike through this, and then start to find some stability in this because there is a lot of, you'll start seeing people put longs here. So people are going to start to say, get in here, and they're going to start putting their stops around this area. So you're going to see energy be created around this daily support that you kind of see right now. Would not surprise me in this. So I am watching that. Because of that, I could see us come down and spike in here very hard. This could just spike on down. I do have this area kind of down here and this floating around 82,000, 80 to 82,000 right now that I'm kind of watching, just because of how this price action keeps hitting this and holding. So anyway, I did, just because I want to be pretty forthcoming with you. I'm not saying this is stuff that you could teach yourself. This is stuff that we talk about as trade strategies that we're going to talk about more in our membership side of site. But this is the trade I actually took. Of course, I just went down to this area and said, go ahead and take me out. And then my stop was here on the 30-minute. If this came right back up right here, because I'm getting in right as this is breaking down. This is about where I was entering, and I was saying, hey, if this breaks out, I want to just be in this move. But if this comes back up, I'm going to get out right here. So I could have easily taken a small loss here, and I would have just gotten out because this should have started to break down. It already attested. It got a lower high, so you had the higher high, then the lower high, and it was like, okay, if it's either going to break down here or it's not. It's kind of what I was saying. So my biggest thing is, yeah, I got in. I'm taking the risk for myself. Now, if you're trading the system, and what I always talk about is you want to get the 2 candle closes on that 15-minute, and you didn't get it. That's what the chart is trying to do, to save you from getting hurt. And you can see it didn't really drop, right? It went, and then since then it's kind of traded up. Now it's kind of testing the 200. Kind of grinding around. It's playing around this breakdown again, kind of like it did back here. So this is a strong fight zone that we're kind of sitting in. And we could see the rollover and come down and crash. I'm kind of excited for it to kind of do it, to be honest, because it'll kind of help create this bottoming area in the charts. We're already kind of setting that right now, just based on how the longer time frames are starting to set up. But like I said, I just kind of want to show you guys how I'm thinking when I am trading. You hear me talk a lot about the consistency of the same system and the same strategy, because that is the big strategy that we're always going to stick to. That's exactly what we're teaching on the Kabroda Trading Battle Box. We're always in that direction. We're always teaching that, and the reason why is because we want to really set you up for success. I don't want really people doing kind of like what I did today, until you really teach yourself how to do this and really become confident in it. If you're like, I don't even understand what he's talking about here, okay, well, then let's go back to the simple trading strategies where you put in the key levels right now, and you put them into a GPT, which we do have the link in our description that you can get. It does talk about how to put these levels in that actual GPT as well. Anyways, it helps you build this out, so you have this daily triggers, breakout trigger, breakdown trigger, and then you have and you might think this is crazy, but you have your support all the way, or your resistance all the way up here at 94,500 range, and then you have your daily support down here at 85,100 range. So that's a nice range right now in price action. Until it really starts to break above those ranges, I'm not going to call bullish, but right now I'm not going to call bearish. We're starting to get into more of a neutral behavior in the charts. You can see it was very bearish, and now we're starting to kind of fall out. We're starting to flow out, and it's not necessarily having to say create a bottom yet. I'm not going to call that one, but we are starting to fight in this key level, and this is why we put the levels on the charts, because that's what gives you a backbone in trading is chart levels, and that's what the support and resistances are. You always hear us talk about this. And then when you have these solid levels, now you can start to look at the different time frames, and you use your 15-minute or your 21 moving average, this white line on my chart, and this yellow line, which is my 200 moving average. And if we go out to the longest time frame, it's like, okay, are you bearish or bullish? Well, let's make it simple. Let's go out and just look at those two lines. So right now, my daily, we're underneath the 200 and we're underneath the 21. So I'm going to be bearish on the daily. Let's go into the 4 hour. Right now, I'm underneath the 200 and the 21. So I'm bearish on the 4 hour. Then let's go to the 1 hour. Right now, I'm still underneath. We're fighting it. We've been playing with it. You can see the spikes here, but we're still underneath both of these. So I'm bearish on the 1 hour. But we also have this solid floor that's being created here that we keep fighting into. And this floor is from a long time frame, like your weekly and monthly time frame. So you have this solid floor from a long time frame, and then you have this push down of these moving averages right now on it. So it's getting pressed on this area, which it keeps fighting and then bouncing up, pushing up, pushing up, pushing up. And now these moving averages are slowly starting to get closer and closer to where the support has been. So more than likely, that's why I said we'll probably see it spike through this major support at 85.5 and probably find an area, and it could even close right back up above it. But once we start seeing these moving averages start to come back up underneath price action on these 4 hour, you'll see it stack really, right? It'll say the 1 hour will actually start to get tighter and tighter and start to build support underneath this area that we're watching right now that's holding the charts. And it'll come up underneath. So now you're starting to stack that support level. You're starting to build a foundation, and you want this concrete foundation. So that's what we're looking for. If you're trying to figure out where's the bottom in the charts, that's creating a bottom in the market. That's what you're looking for this to have happen. So if you're asking me, hey, where's the bottom of the market? Well, I just explained it, right? That's what you're looking for. That's what I'm looking for. That's what I'm going to call the bottom of the market too, and be like, well, this now is starting to hold. We're starting to shift the direction now. So when we're back above the 21 and 200, we're going to flip bullish. So let's see if we can get bullish on the 1 hour. Let's see if we can get bullish on the 4 hour. And then what'll happen on the daily, we'll get above those two as well. And then we can say, hey, we're bullish on the time frame as well. Like right now, if I went and looked at it, you have the 200 down here and you have your 21 up here and price actions in the middle. So you're neutral right now on the weekly. So what we really don't want to start seeing it do is go underneath that. We don't want to see it go down to that 200, which that 200 is pretty far down there. And all this, since we're on the charts, and you're probably wondering, well, where is the 200 on the weekly? Well, we're on the weekly chart, and the 200 is way down here. And I do have the levels marked, and this has slowly been grinding up to it. Now we're already up to it's right around that 57,000 range. Well, our weekly right now is pretty close to that. And this could continue to grind on up. And we may never see that, but if it does take that area out, now that to me is a little more, now you're starting to get a little more bearish, a little more out. But this easily could grind back down. This could easily come down, and we could start finding a floor right down in this area right here. This could certainly grind down. Of course, this could come back up and start catching it way up here. Well, we want to get ahead of it before then, right? You don't want to be catching the market as it's already starting to move back up. You want to catch it on the bottom. Everybody wants to buy the bottom, right? Well, that's what you're looking for. If you're trying to figure out where's the bottom, that is the sauce on how to figure out where the bottom is. We have a solid level in the charts. We have a solid level here. Anywhere in between here, I would say, is a pretty solid area for us to find a bottom here. Just like I talked about, this could come down here and create a bottom in here, but we're going to really know when the 1 hour, 200 and 21 get underneath price action during that time frame. Same with the 4 hour, and then we start to show strength. The daily starts to come down. We start to rebuild that area as well. So that's what I am looking for right now. So we'll just kind of continue to watch the charts play out as that happens. So that is a little bit of insight. That actually is inside of our it's our training within our AI, everything I just explained to you, you could just ask that question and it would help you lay this out. It would actually explain a lot to you already, what I just explained to you. And then of course, when you're watching our videos, then you would understand too, like what we're talking about. So that is TA actually. A lot of people try to think, what's TA? And charting analysis, how do I figure all this out? That is the simplicity of it. We have a lot going on here. You can draw these lines on here if you want to. I could take them all off for you if you wanted, and then it just looks pretty basic with your moving averages, right? Nothing fancy. The hard thing is right now, it's like, well, where's the support and resistance in this chart right now? That makes it a lot harder to figure that out, and that's what we're doing, is we're helping you figure that out. So, all right, guys, hopefully I gave you quite a bit of stuff. People pay good money to have that kind of stuff. I definitely don't care. I want to help people out. I want to see people succeed. I want to see them be able to change their lives for the better. There's only a few things that you can actually do that to actually outpace inflation in the US today. Going to work every day, there's very few jobs that can truly outpace inflation today. You need to either be a business owner, investor, something like those kind of things, or you have a very unique skill set where you're getting paid that's outpacing inflation, but you're very small compared to probably the rest of the workforce around you. So that is just kind of that reality. So get yourself where you can get yourself as an entrepreneur, and get yourself as where you can invest, whether it's on the charts or it's in some type of real estate style investment. Doesn't mean to go out and buy rentals. That's not the best thing. But anyways, not getting too much into that. This is kind of a TA, learning how to chart and read stuff, not getting into business development. But there's a lot that you can do to better yourself. And if you're trying to get yourself ahead of the game, if you will, and feel like you're growing and developing yourself, this is the kind of stuff that you can do that with. So, all right, I will leave you guys to it. Enjoy your day. Back test, teach yourself the charts, really dig in. The only way you're going to learn is to do and screw this up. You don't have to actually put live money on to do that. There's a lot of ways you could demo trade. You could actually just go ask AI. You could Google it. There's a ton of things you could do to demo trade. Or you can just practice by looking at the charts like I was doing through this recap. So, all right, guys, I will leave you to it. Like and subscribe, and we'll see you in the next recap. Talk to you soon.